All right, thank you, Scott. Eventful. It's been a busy day. A lot of people coming in to trade ideas after, like Scott said, a successful test drive. And also, like Scott said, I am flying solo today, so I will do my best to keep an eye on the questions panel. I'm sorry if I miss one, but I'll do my best to keep an eye on that. Yeah, it's been a couple weeks since we've gathered, so I do have a few things I can certainly talk to you about. So we'll get started here as people do file in. Right, first slide, just a reminder that, I'm a trader of my own accounts and also an employee of Trade Ideas, and I will talk about a lot of charts and things of those natures in this webinar, but none of it really is designed, nor should it be construed as official financial advice. If you need that information, you got to go seek out the registered guys who have their names in a database someplace. All right. Yes, Neil, it will be recorded. Just check out our YouTube channel either later tonight, more likely tomorrow morning early. All right. So coming off of, again, the test drive, I think a lot of you can see how much 2 weeks really does mean when you're trying to kick the tires and learn something as rich as the product suite here at Trade Ideas. And so hopefully a lot of you have kept it going and you're here to learn some more, and the way in which we try and keep you guys learning curve as short as possible are these webinars. More importantly, though, is Barry's live trading room every day of the week, live bell to bell. Free price, you can't beat that. A lot of good information in there. Barry is a pure day trader. Myself and some of the other guys here are longer term swing traders, so you get a bit of a mix with different sets of eyeballs around here. And then, as I said, the other guys will take over for Barry on the noon Eastern hour just to give him a break, and we take over the live stream feed. And it also gives us a chance for a lot of pent up support over the evening, people that are looking for an answer that we just can't give over the phone, but we can give on our live stream where we give you a visual demonstration and go back and forth on the chat window. So please, by all means, tune into those if you haven't been to those. A lot of good support can be gleaned from those noon sessions. And then, of course, the afternoon webinars. If you're trying to get to the the live stream I just spoke of, there's the URL at the bottom there, trade-ideas.com/live. We'll get you in the YouTube matrix. Once you're in the YouTube matrix, they won't forget you. If you tune in at the same time, they'll throw that thumbnail up of Barry's room, and you can join us. Super simple. All right, just the theme I always start off with as a reminder, technology is great, but it's not the end all be all. We can't just turn something on and go play golf for 6 hours and then check and see on our mobile app how much was deposited that day. It just doesn't work like that. It's a great utopian dream, but in reality, a lot of you guys know from experience that that's just not the case. And so the human/machine symbiotic relationship is the way to go. And that's what Trade Ideas does in our space, is serve you up a great list of curated ideas, whether it's something that you want to scan for, something that's been predetermined, maybe some of the strength alerts that Michael Noss has been talking about lately. And we've got some other things coming down the pike as well for predetermined layouts, non-configurable. And then the AI, of course, for people who want to look for what the AI is talking about. We've got that as well. So curated ideas, but once the idea is put in action, really the human being is the best manager of risk, hands down, because we just can still do it a lot better as new information comes to us in real time. All right. Yes, Neil Barry does a great job. I mean, if more people figured out that they're probably paying $75 a month for a room like Barry is offering, they'd be kicking themselves. All right. So again, it's been a couple weeks, a couple things to talk about. I'll go over the market recap. Not much to talk about AI, but I do have a point I want to drive home on that today, which I will in Andy's absence. Trade of the week has not triggered, but we're going to talk around it and look at it and see how it's developing. And some of the other names that I mentioned in the email. There's one in particular in there that's working pretty well. For some of you that were in Jamie's webinar yesterday, sorry, we're going to double hit you again with just kind of a tease of the new user interface, the new UI release that we're going to be coming out with called version 5.5. The employees and the traders here have been tasked with kicking it around and stretching it and throwing it down the stairs and seeing if we can come up with any things that need improvement on that before we turn it loose to the beta for you guys. But I've got a couple things to show you on that as well. And then I really want to just kind of go on through that sector watch list and look at some of these ETFs, because this market has been just a constant rotation. And boy, some of the darlings that were in favor and in play just a few months ago are no longer there. And so we've got some things we're going to look at for sure. All right, so let me get started here. I'll get back to that. I'm going to start in the 40,000 foot view of our S&P. Not much has really changed from yesterday when I spoke with you and Jamie's webinar, except just the constant reminder of how important this 50-day simple moving average seems to be to the S&P, the SPYs. And as you notice, once it gets a little too far away from that 50-day moving average, we start to get a little corrective in our price action. And so, during the noon webinars last week, it would have been right around here. I said I really was not that I was not bullish at all. Let's put it that way. But I wasn't bearish and I wasn't short the market. I was just kind of waiting to see what was going to happen, because once again, it'll show up even more on the NASDAQ. I'll just jump over to that right now. What we had working last week in my mid session was bounces off the 50 up into what I call the armpit or the pocket of the 10-period moving average, and then a big slam back down to no man's land down here. And then 3 more days of solid rejection there at that declining moving average. And so when I spoke to you guys last Tuesday afternoon, I was just saying I really want to see how these averages are going to resolve, because what they've done in the past is they've fought their way through these tangled webs of moving averages, and then they start to post closes back again in clean air above it all, above all the mayhem and the fray. And so that is where we are now. 2 weeks since we've last spoke, we're right back above. And so definitely not bearish. I'm just looking for ideas. What I think the markets are going to do here, the indexes anyways, we're just going to kind of see some of this again, some sideways action as our key moving averages kind of come back and support the price once again. Whereas just last month or a few weeks ago, a totally different story. The price action was being slammed back down, and we were just kind of painting a real wedge here between the 50 and these declining moving averages. But seems as though it's resolved itself. The little weakness that we had today, we opened the day pretty much near highs and just kind of sold off. But in the bigger picture of things, we've spent a lot of energy bouncing off that 50-day moving average, and it's really to be expected to just kind of throw in a little grinding, catch your breath kind of back and fill day. And so that's really where we are in the S&P. Back to the NASDAQ again, was under a bit more pressure, but is doing the same thing now that the S&P has been able to do, and that is post a couple closing candles here above the key moving averages, showing us we're back in clean air. Maybe this was just a little monkey bath in the sink in the bathroom that the market needed. We didn't get a full shower, a full soaking, but a rinse off nonetheless of the price action to push right back up to highs. So there's a lot to be said for not fighting the Fed, which is really kind of what's driving everything right now. The Fed is being really as accommodative as they can be. But at some point, the trend will not hold. But for now, the trend is holding, and that's just quite the sight we see there in the NASDAQ. One more thing before I make a point is the IWM is kind of holding up the rear. I mean, if I go back in time, I remember talking about, hey, I was a little nervous back here. The head and shoulder action is really starting to possibly show up here in the Russell 2000, our small caps. And I was saying, hey, we really need to be careful for something like that. But in hindsight, it's totally clear. We got a little something and then a little something back and then back. And it's just back and forth. So this is really, if you guys remember how much fun you were having if you were participating in a lot of those small cap names, especially the EV vehicles 4, 5, 6 months ago, they were having a ball, on this upswing back here of these small cap names. But, unless you're quick and nimble and taking 2 and 3 day profits or a day and a half profits, we've gone absolutely nowhere in the Russell 2000 and small cap land. There's really nothing to speak of but just sideways chop action. And it starts to show a very nice range. If you're trying to get really bearish and really short down here at these levels, history has told us that the buyers have come in and just squeezed those people right off that bottom channel again. But then to come into today and zoom into today, what I'm seeing is still a little bit of apprehension here. It just can't get its candles in the IWM to close above its key moving averages like we have seen over there in the NASDAQ and in the S&P and in the Dow for that matter. So, just a little one-off there in terms of what isn't really following along in terms of the big rotation game. But I think the reason the SPY has been more of an uptrend in the last 5 months, again, the NASDAQ doing the same thing. That's some serious sideways action in the NASDAQ for the last 5 months. So the S&P is really where the gains have been given in the last 5 months with this trending higher lows and higher highs. And I would venture to guess that it's been because of the rotation into value and in growth and in energy and in financials, a lot of the things that are not showing up over there in the NASDAQ. So that's my take on that. I want to just kind of hit on something as well in terms of a trader's almanac of taking the pulse of the traders. When I tuned into this afternoon's afternoon webinar, I kind of caught Barry on the tail end talking about how he said, hey guys, if you're new out there, I just want to remind you that, a lot of the money he's been making, he said in his own voice, I've been making money on the short side. There's been a lot of really good short sells that have worked really, really well for me. And that makes total sense because whether it's the trade of the week or some of the swing trades that have not been performing for me, I'd love to say I've been killing it for the last 2 or 3 months, but I can't. I like to sleep well at night. And be honest, it's been very tricky. One of the reasons is the typical break of resistance is no longer following through. It's just a reversal in a vacuum dropping back into the ranges. And so if you're not really on the ball and you're trying to be greedy and make bigger profits, that makes it kind of hard in the end to add up all the good ones against the bad ones. And so Barry made an interesting comment. He said, hey, I seem to be making better, there's better follow through, there's better action on these shorts lately. And again, that just makes perfect sense to me as to why the market's been very difficult lately. It's kind of been 3 steps forward, 2 steps back. Again, we look at the S&P up a point or up, $1.50%, and you look at your swing trades and they're down 2 and 3%. There's just not a lot of semblance out there. It's a lot of individual stock picking names, and you got to be in the right names. That is for sure. So on the heels of that, I'm going to kind of bring it over to where Andy would usually come in. And so, by the way, just to rehash, there's no bear case to be making here. Today's red candle was needed, just a little bit of a pullback and a grind. And I kind of think, like I said, a little bit of sideways action probably wouldn't hurt here, over the next couple of days to set up some nice jump rope setups to maybe go long again and see if we can get some follow through. But yeah, the follow through has been hard. So the only thing I'm really going to say about the AI today is something I've brought up in the past, which is what I call directional bias, and not want to go through every single one of these trades. They are what they are. The AI picked them for a reason, but the AI is also sampling trade data off of this grinding market in a lot of cases, that I've been showing you for the last couple months here. So not stellar performance, but here's what sticks out to me for the most part. Directional bias. It's sorted by the best trades. Well, it looks to me like the AI is kind of agreeing with Barry and myself for that matter. I might need to start learning how to get back in the single short game. When I try to go short, it always seems like it's been the ETFs or the reverse ETFs, and they work for a day or two and then they reverse hard on me and I either get out for a small profit or a flat. But the individual names sure seem to be having a little bit of more meat on the bone. So I found that very interesting today, that of all the trades, the 2 shorts out of 8 or 9 trades there total were by far the best winners of the day, whereas the longs just kind of slopped around. So sometimes not on an individual basis or a trade by trade basis, if we just pull back a little bit and kind of say, what's the AI showing us? In this case, it was kind of a directional bias. And again, I agree with Barry and some of the other guys. If you know how to short, or if you don't know how to short, start learning how to. And I've got a couple ideas we're going to look at in a minute. Okay, so enough of that. Getting into the trade of the week, which is the basic header of this webinar. The last 2 haven't worked out very well at all. USO has just been grinding back and forth, not doing a whole lot. As a commodity ETF, there it is, just back and forth. It tries to break out and then drops back into the zone. And then ASO also, fake breakout and then dropped right back into the zone. Nothing pretty. But I noticed going into the weekend that a lot of the gold mining names and silver mining names, which I've been bullish on, especially the last week or so, as they're starting to show their true colors. Let's just do this. I'm going to go right into the gold miners, and that is kind of what I saw. Yeah, going into the weekend. Sideways consolidation. Now I can add 2 days here quickly, and now here's where we are today. I got to tell you, I really liked this down drive. Those of you who have heard me talk a lot about price action and how human beings are not really running the markets anymore, it's algorithms and quants, and they sure have a funny way of trying to chase people out of good positions in the morning. Good positions in the morning there, I meant to say. Only to reverse course and close higher. And that usually is a precursor of good things to come. So I really kind of like the overtones here of the GDX and the GDXJ, for that matter, the junior miners. They have their own little ETF, and that one's even a little bit stronger in terms of the pennant it's flashing. So as mentioned in the email that went out going into the weekend, there you are. Once again, it's a top-down approach this week, as we're looking at the sector of the miners. GDX looking very ripe 2 days ago, and I will add it looks even more ripe today with this nice little bottoming tail. Sometimes I equate that to like, stepping on a ladder and you're putting your foot down there just to make sure you've got a good solid footing, or, kind of the reversal of a good putting stroke, kind of push it backwards before it pushes forwards. The counter move before the move, whatever you want to call it. I like to see that, especially on these daily charts. So I'm really going to be predicting a good week, a good Wednesday, Thursday, Friday, I think we're going to have coming in the gold market. So if you've got any names out there that you like, keep an eye on them. The benchmark gold standard Newmont has just been going sideways. And it's almost like we're just waiting for that moving average to touch Newmont tomorrow and take the gold standard gold mining stock, for lack of a better analogy, and maybe push higher on that. But our trade of the week has not triggered. The blue line there above Friday's high is our trigger. And I really like, again, same thing. Big opening drive down. Again, this is algo driven. It's not human beings. Across the board, this was happening in all the gold names. A big push down with a close off low significantly, giving us a nice little bottoming tail there. I think we're possibly going to see a trigger maybe tomorrow in this particular stock. I almost bought this at the close because I'll do that sometimes. I'll just kind of anticipate the way it's closing and gives us that look 5 minutes before the bell. Let's see. Well, yes, it did trigger. You're right, Neil. It did trigger today on the actual GOLD trade of the week. It did trigger. It came down on that opening drive and pierced that 10-day moving average, as opposed to what I was just saying, of course, in Newmont and the GDXs in general. So yeah, good observation there. So in other words, if that's the case, then our GOLD has the green light for a nice push tomorrow. I'm expecting I'm expecting a good move in that tomorrow. So that's all I really had to say about that. Check the comments there. Yeah, looking good on comments. All right. Don't forget, you guys can go over to that similar tab, and you can always go through and you can try and find stocks that you might not have been aware of that could be in the same sector that you might want to keep an eye on. Don't forget about that. Oh, I know where I wanted to go. There are some weeks where I just not quite sure what I want to hang our hat on for the actual trade of the week. So I give additional ideas. And in these additional ideas down here, you can see GDX and GDXJ, which we just talked ad nauseum about. You can certainly make a play off of that. Box was looking interesting, but boy, it gave some away today. Yeah, boy, I don't like the way that closed at all. This is the kind of close that would get me out of a trade at the end of the day. So no follow through on that one. The other one that I mentioned, some of the guys were talking about here was 10. 10 looked like that going into the weekend, a real nice triple bounce off the 10-day moving average, and then follow through yesterday, a little bit of follow through today, and now it's probably in consolidation mode. XLF was another one I said to keep an eye on, and this one is sure taking its sweet time. I still think it could do something this week, but that's a pennant or a triangle, a wedge that's probably going to resolve itself higher. But the one that I really like that was on that list as well is AMC. And I took that one home on Friday. I've got it mirrored in my account over here. And this is, similar to the GME trade. As long as GME is happy, usually AMC is happy too. It's the same kind of mentality over there. The sellers seem to be really strong, and boy, 2 really strong days. So if anybody happened to catch that idea there, AMC on the email, that was a good catch, and probably one of the better trades I was able to snag over the last couple of days here. How do you scan during certain hours from 2 to 4? Jim, you can scan a filter called time of day, and the time of day you would just add minutes. So you'd figure out if there's X amount of minutes in the day, you'd make the minimum 120 minutes before the close of the day. So that would be whatever, somebody would have to calculate that for me. But it'd be something like 400 or 500 minutes. You put that in the minimum, and that way the scans are not spitting anything out until you reach that minimum threshold. It's basically a countdown from the opening bell as to how many minutes you want to wait. All right, so by the way, my plan in AMC is to probably sell at least half on the open tomorrow, especially if it's a really good runner, and not get too greedy and take half off the table on that one. So that's been really one of the better ones I've been able to talk about lately. All right, so where I wanted to go next, I think, was to talk about a little bit more on those container windows that we've got coming. And that is, yeah, the new windows, okay? So I know Jamie talked about it yesterday, and I've tried to put a couple together just to try and play around with a few things. You'll notice if I go to my minimized windows here, I got a couple of Ds. Let's pull up that D, compare count. D stands for docked windows. Okay, I turned my liked window and added a couple of charts in that docked window. And then the last one was, I was playing around with these morning jams. And I want to talk about that in a second. But in terms of the functionality of these, there's a couple ways you can do it. And again, you don't have access to this. This is something that we're kicking around and trying to come up with things that might need improvement. For instance, right off the bat, you can see these are 2 separate windows, but if I click over here on this chart, the other charts in my other docked window change, and I don't want that. So we're gonna try and fix that before that's released. But these are just container windows, and they can be moved around very simply. If I wanted to add a new window, like let's say if I wanted to just take this particular window here, I could right click that and say duplicate this in the compare count sector, and there it is. And you see now, you have to pay attention to these tabs. These tabs are where all of the navigation comes in. So I've got 2 tabs sharing this same quadrant here. So I could basically grab that tab, and once I pull it into the window, I get this menu bar. Do I want to split the difference top and bottom? Do I want to split the difference left and right? Yeah, that's probably what I want to do. So I'll put my cursor on that, and I'll designate now my container window has one more window in it that I borrowed from over here, and I can always just kind of keep an eye on that stuff. That's one way to do it. The other way to do it is to open a brand new docked window and then just start adding things to it from there. But that's the general idea. But one of the things I did is I took my family of jam downs, which as some of you might know, are the ones that look for a opening drive down, just like I was talking about in gold and in some of the other, these other names. And if the right filters are satisfied, then I will see a new low on the open. So these are the jam down buys. I'm going to go through this real quick, and we're going to look at something here. Let's look at kind of what happened. What I want you to focus on is what happened after the low point on the day, which corresponds to, all right, there's my 10-day moving average. Typically in a good market, these will come in, jam down on the open, and then finish the day a little higher, but I'm not seeing that. And so kind of where I'm going with this is, again, to bolster that notion, that theory that even Barry had earlier. We're not getting a lot of follow through out there to the long side, guys. And I'm going to show you another kind of example of this. So as we go through this morning, let's just click on this. ENBL, there's our signal. Look at that daily chart. I mean, that could have easily bounced and done all the things I've talked about forever for the last year of what my favorite chart looks like, but it didn't do it. It bled lower. Interesting. Oh, another one. There's the low of the signal and it just bled lower. These things are not working anymore. There's another one. There's our low signal, bled lower. Not liking it. And so it's going to be kind of the same on everything that I look at. That one barely went at all from that point. And as I've gone through this scan in the past, you guys, usually that blue arrow is kind of a nice low point on the day where you get some nice lift off that. We're not getting that. So again, I look at the SPYs, I look at the Qs, I see the uptrends, I see that, but in the individual names, they're just not acting like they used to. I made a jam down junior for micro caps, a little bit different over there, but I'm not going to really base a whole lot off of that. I'm going to base it off of this. Now, I reversed that scan, flipped it upside down for a short seller, just like what Barry was saying. Hey, my shorts are actually working. They're following through and they're going lower. Well, if we were to use this as a early warning entry of stocks that are pushing up, they're already in a downtrend, so they're not exactly a great looking chart on the daily, but everything I click on here is going to be pushing up into the open, and that is going to be the high of the day where you see the down blue arrow, and ideally, those stocks should be moving lower from that point to be working as shorts. So there was our first one of the day, and boy, howdy, what do you know? That little spike right there was a pretty darn good contrarian to the short side for the rest of the day. That one checks out. All right, well, there's another one where the close was lower than the signal. Another one where the close, it went higher, but it did eventually close lower. So there's another one, the high of the day pretty much was the high of the day, it closed lower. A very marked difference between these two styles of fading. Again, the new lows used to work well as a great buy. And then I would come over here and I would talk about the jam up and see if those would work into good sells, but they never really quite did until now. I'm starting to notice that. Yes, I will certainly share those. Jim, anytime I share something, look at this. Here's another stock. It's been beaten up on the daily, got everybody excited. And the minute it touched that 10-day moving average, it gave us a sell signal, went a little bit higher, but in the long run, that was a good sell. And then, oh, there's the only one that didn't work out of that group. So yeah, let me do that now before I forget. I'll give you both. I'll give you all three of them. Just give me a moment here. Okay, so this one, the first one is the jam up. It's a sell signal, even though it's a new high. I'm dropping these into the chat window here. Not the questions window, but the chat window. All right, so let's do the jam down, save and share. And lastly, this is the jam down micro cap, which I don't really talk much about because I don't use it. Okay, so really just trying to piece together why it's difficult to trade the long side of this market right now. Yes, the S&P keeps going up, but boy, these individual names sure are getting tricky. Sure are getting tricky. Let's see, DRIP is a bear leveraged ETF on oil. Yeah, so, yeah, okay, interesting. That was in there? Okay, yeah, that was that last one I looked at. Didn't realize that. Thank you, Dave. All right. So again, a little bit more on the container windows. That's nice. I can just kind of keep those at bay, then put those back down. So going forward, we'll talk a lot more about how the free floating windows are going to be kind of a thing of the past, and we'll really dial that in for you guys. What did I want to talk about lastly here? Yeah, let's go ahead and just go through the sector watches. And then every time I go through the sector watch, because again, that's really what this market is all about right now, is where is the next rotation going to come? And more importantly, how long is that rotation going to last and follow through? So let's go through. Hey, let's play with my new docked window, shall we? We'll do it that way. We'll go nah, I got too many windows in there. We'll just go through my basic one here. We'll pull this down and we're going to be looking at the daily, most importantly. Let's see if we can find some ideas in a bigger sense that we might want to catch tomorrow. I mentioned yesterday, I know some of you are regulars, Dave included, What did I say I liked yesterday? At the top of the hour, I said I really liked those airlines. Well, they opened up and then they just reversed on us. Boy, you just can't get anything to go in one direction for very long, can you? Crazy. All right, let's see what today holds. That's an ugly downtrend. Those are the treasuries. That's gold. It's been very strong. It's not as silver is not as strong as gold, but that's our commodity. And again, when we get to GDX, I'm gonna like it just as much as I liked it a half an hour ago. XHB, interesting. Kind of showing some weakness there. It's having a rough time getting back above. I'm gonna make a mental note of that. It's not as strong as it could be. There's our silver ETF for the commodity itself, big finish, big follow. Again, these things can have big overnights. You never know. That looks very similar to the NASDAQ, the semiconductor index there. Self-driving cars just kind of downtrending. All right, I don't think I'm going to find anything much better than this sector. So get your pencils out and sharpen them and figure out what your favorite gold mining stocks and silver mining stocks are tomorrow. I think they really could be in play. And there's our junior miners as well, showing even a bit more strength in that ascending wedge. NASDAQ, we did that. For the life of me, I'll say it again. I have no idea what's holding up commercial real estate and office buildings, but hey, the investors still keep buying them. IYR REITs, NASDAQ technology. Oops, there's our USO. We looked at that. False breakout, horrible plunge down and right back up. Very nasty. We looked at the airlines. Great look yesterday, then gapped up into nothing and fell into the abyss today. Dow above all averages, looking like the others. SPY, we looked at that. Healthcare got a little ahead of itself, probably ready for a bit of a pullback. Still, the only thing super interesting to me in terms of timing anyway is those gold miners. Well, that retail does not look good. I'm going to tell you that right now. Retail XRT is not looking good. It can't get back above these averages. Looks a lot like that Russell 2000. Another downtrend in solars, after a bit of a dead cat bounce in solars. There's the IWM, we talked about that. XLF, I did mention that. I don't want to write that off yet. I mean, if interest rates continue to creep higher, there still could be, as I said, some resolution coming out of that wedge. So gold miners and financials. The banks don't look that great either. That was KBE. Brokers got ahead of themselves, broke out today, and then slammed down with a big candle. I'm not seeing much else, guys. I don't know what's holding this market up. So it's play individual names. I think we learned today also, learn how to short sell. Short selling is very difficult when you wait for it to break yesterday's lows. But I'll tell you, that jam up that I put out there today, if you haven't grabbed it, take a look at it tomorrow and see if you see some interesting contrary indicators. This market is so tricky. It's not going to make it easy for you. It's not going to, shoot a starting gun and say everybody go long or go short at this level. It's going to try and fake you out, especially in the open, those first 20 minutes. If you wonder why you always get your stops hit on your good till canceled stop orders with your broker while you're out playing golf, why those always happen in the first half an hour of the day, is because that's the coordinated attempt where everybody put those in overnight and they find the perfect pin set where they can bowl them all over and knock you out the next morning. It's a very volatile, short-lived market. Things are not going in one direction for very long. All right, so I answer a question or two here. If anybody wants to look at, we can look at 8 or 10 charts real quick that you guys want to look at, and I can finish up with that. But that's really kind of all I got for you today. Let's see here. Yeah, we got Dave's question. All right, Maria, using all 3 moving averages easier or better than using one with VWAP? That's a good question, Maria. I think there's no right answer, and I'm not going to say the way I do it's better than the way other people do it. Like Brian Shannon, my good friend outside of trading and great trader, uses exclusively anchored VWAP. He is always interested in things like grab that anchor there and go to the low of that candle there and see how does that purple line hold up going forward. And there's a lot of value to it, but I've just kind of gravitated to, and I will look at that as a secondary, but I have gravitated to just trying to keep an eye on simple momentum, which means for me, what's that 10-day moving average doing? And if that 10-day average doesn't hold, will the 20-day moving average, like ASO, is that going to hold? Or TGB, another one that closed not the way I wanted it to close today, is that 20 average going to hold, I mean to say. And if it doesn't, I might have to get out of this holding because that's my backstop. So I really like the 10 and the 20 because it just shows up so clean when it works for me. And then if the 10 breaks, if the 20 can't hold, then it's time to reassess. So if you want to learn more about anchored VWAP, you can look into that, Maria. Brian Shannon at Alpha Trends does a great job on that. I don't use any VWAP in my normal overlays, but I will tell you that this particular chart right here is clean. It's clean for a reason because I will come in and grab like an anchored VWAP off a low or grab an anchored VWAP off the high and kind of see where my levels are. And so I will use a little bit of both. But if I had to pick and choose, I'm going to use my 10 SMA on the daily, my 10 SMA on the 15-minute chart, and that's really my go-to moving average to gauge momentum. The other moving averages like the 50 will come into play as to general health, as I mentioned on the S&P. The 50 is your general health. Well, it's telling us that generally speaking, the S&P is healthy because it's on the right side of that moving average. All right, almost losing my voice here, but let's see. We'll start with Dave. And if you have any other scans you guys want to put in for charts, you can piggyback on Dave, but he wants to look at Lilly and United Health. First one is Lilly. Whoops, I like to keep that up here so I can see what I'm looking at. There we go. All right, Lilly Pharmaceutical. Also in clean air, kind of like, this is kind of like our S&P and our NASDAQ look back here. Well, it stayed above and started to respect that rising 10-day moving average, got ahead of itself a little bit yesterday there, Dave, and it's probably going to pull back and maybe kiss that moving average again and see what happens. But it's hard to get things to go for more than 2 or 3 days. The other one you want was United Health. Very strong trend over there. Good example of how the 10-day breaks and the 20 holds as my backstop there. 10-day broke here. Will the 20 hold as a backstop here? It looks like it's trying to fight above. Got actually 3 days of closings back above, so this thing could continue to grind higher. If you lose it, and then this becomes the no man's land, and I would start immediately looking down to see where is the 50-day moving average on that one. All right, Corey, HMY, I do believe that is a gold miner, so I'm happy to type that one. HMI is looking really good, got ahead of itself like a lot of the gold miners did. It is working off that consolidation like many of the gold miners are also doing. Some are doing a steeper pullback than others. The more sideways you can get, the stronger it gets. Look at that, a nice kiss of the 10-day moving average. I'm gonna guess on the open. Yes, perfectly on the open, right where it should be. Closes strong. I expect good things. Like I said, the GDX, the gold miners, I expect good things this week from them. What's the other one you have? Is it HL or HI? I couldn't tell. I'm going to go with HL because that's the mining company. Very strong consolidation. We've got the ascending wedge happening over here on this consolidation, right? Even stronger than a sideways or even stronger than a pullback. Love it. Maybe, sometimes they do go without even touching that 10 period, but in my mind, I'm kind of OCD when it comes to these charts. I like to see them touch that line just so I know that the algorithms hit their target, because algorithms don't like no man's land. Algorithms like waypoints. They like targets, hit target, if then reverse switch, greater than, however you write that stuff out as a programmer. So yeah, those are 2 good charts I like, Corey, definitely in the right sector. Key, that's going to be Key Corp, commercial banking. I noticed the banks were a little soft today, not as strong as the XLF in general. Geez, horrible candle in terms of breaking out and then reversing. It's going to have to close. It's going to have to hold that low. It's going to have to hold that 20, just like we've been talking about the 10-day. If it breaks the 10-day, it's got to hold that 20 as a backstop. If it doesn't, then we're probably looking back here at $22 again, just on the sideways action. Again, coming off the heels of the opening of the webinar, we have been going sideways for a very long time now, hoping for breakouts to work, and hold is, the odds aren't favoring it, but we still do it. Deutsche Bank for Gerald. Deutsche Bank's been looking great. I don't know what got into that thing last month, but whatever this was, looked great. Took off when it should. Back here, it was really concerning me as a world global dealer of all sorts of crazy instruments and derivatives. But hey, much better up here than down here if you're concerned about global finance. Looks solid. Probably got ahead of itself the last couple of days. Probably has a date with this gap and maybe even this 1450 level as the moving average comes up to catch up to it. A lot of scanners to choose from. Yes, Maria. And how do I personally choose my stock based on scanners, pre-market and market open? That jam down buy that I shared earlier it's been kind of the thing that I like to look at. Strong stocks on the upside that consolidate sideways, reach down on the open, try and shake the trees, and then start to get strong again. I like those. There's no one right answer to it. I've been doing this for so many years. I just kind of know what I'm looking for. I just kind of, rely on past winners and losers. We learn a lot from our losers. We learn from pain. So if you're a brand new trader, just try and focus on what time frame works best for you. Make your mistakes cheap and try and learn from them. And don't try and come in and guns blazing and make a bunch of money being new at this, because there's really nobody that I know that is able to do that very well. And if they do, it's a tremendous curse, because they probably came in at a period of fervor and feverish frothiness, and they think that you just throw darts and you buy anything and they go up, and they quickly learn it doesn't work that easily. All right, Scott, so one more here. We'll look at KL. It's a gold play. Probably great to end on that one with Betty Sue here. We'll look at KL, then we'll bring in Scott and see what's going on. KL. And as soon as my screen doesn't freeze, I'll be able to pull up KL. Sometimes when I broadcast, it does that. There we go. Hey, KL looks eerily familiar to gold, doesn't it? And I say that because the 200-day moving average in gold is also right there on the downside and holding the rising 10, where the one that you pointed out, KL, is also holding the 200-day to the downside and getting ready to ride that 10. They all look alike, and I just can't pound the table hard enough, guys, I think, for the gold miners tomorrow and the next day. All right, so that's all I've got. Let Scott come in and give us any announcements, and you can email us your questions if I missed any.
Awesome. All right, nice. Thank you, Steve. A couple items. Go ahead and grab that free strategy indicators ebook. It's written by our director of software development, Dave Mabe, and you can find that at trade-ideas.com/strategy. It's also got some cloud links in there for you to use in your layouts. It's free, so go ahead and grab that. Trade Ideas Podcast comes out periodically. Go ahead and subscribe. Search for Trade Ideas Podcast in your favorite app and add us as a subscription. You'll be able to pick up the next edition as soon as it comes out. And you can check out the archives. There's some good interviews in there that we've released this year already. There's a test drive sale because we had a successful test drive. We're letting everyone participate. 25% off your first month or year of Trade Ideas or upgrade. 25% code, test drive 25. Use it before tomorrow midnight and do that upgrade or start a new subscription. If you have any questions, you can find Steve on Twitter at TISTG. Also follow us at Trade Ideas. Trade Ideas Pro is the Facebook handle. And info@tradeIdeas.com is the best place to send any of your questions. It goes into our help desk and gets you the answers as quickly as possible. The recording will be up later on tonight or tomorrow, and you get an email reminder about how to find it. Thanks, everyone. Have a good rest of your day. Thanks,
All right,
Steve.
see you next time. Yep.